Does the Ageas Federal Guaranteed Income Plan truly provide financial peace of mind, or are the returns too low to matter in the long run? Let us find out through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand a few basic details about it. So, this is a non-linked, non-participating life insurance plan, and some of the key features of the policy are: you have the flexibility to select a premium payment term and policy duration that suits your needs, and you have the option to receive benefits either as a lump sum or as regular income depending on your preference, and you have the assurance of guaranteed returns unaffected by market fluctuations, and you are eligible for tax benefits under Section 80C and 1010D of the Income Tax Act. And there are benefits like survival benefit, maturity benefit, and death benefit, which will differ based on the plan option you have opted for. Now, let us take a look at the advantages and disadvantages of investing in this policy. So, let us start with the advantages. So, you can avail a loan of up to 85% of the policy's surrender value. You get to enjoy guaranteed benefits throughout the plan. You have the flexibility to choose a plan option that matches your cash flow requirements. So, these are some of the advantages. However, there are some disadvantages, like sum assured may fall short of fully securing your family's future financial needs, and this plan also provides you with lower returns compared to other available investment avenues. And in plan option 1, which is income option, your survival benefit cannot be deferred, and only the yearly mode is available for premium payment. So these are some drawbacks that you need to keep in your mind before deciding to invest in this policy. Now, as we have a basic idea about it, let us move on to the analysis part of the video, where we are going to conduct an IRR analysis based on the benefit illustration given in the policy brochure to help us make a more informed decision. However, if you need to understand or learn more about certain aspects of the policy in detail, you can refer to the policy brochure. Now, for calculation purpose, let us consider a 30-year-old male investing 60,000 rupees annually for 10 years with a policy term of 15 years under plan option 2, which is the endowment option. So at maturity, the plan offers a lump sum benefit of 9.57 lakhs, which is guaranteed, and this translates to an IRR of 4.48% as per the policy maturity calculator, so which is lower than what most traditional debt instruments actually deliver. And if survival benefits are chosen instead of a lump sum, the effective returns will drop even further. So considering the 15-year investment horizon, such returns are inadequate, especially when you factor in inflation. It steadily raises the cost of future goals. Moreover, the low sum assured makes this plan even less attractive for a long-term financial security. The IRR analysis clearly shows that investing in this policy is not an efficient strategy for building wealth or even for achieving your financial goals. Now, as we know that this policy is not giving us the desirable outcome that we need, let us move on to a comparative analysis, where we are going to invest in insurance and investments separately instead of investing in a combined policy like Ageas, just to see whether that can give us better returns and greater flexibility. So here we are going to allocate the same annual premium of 60,000 rupees. But for life cover, we have chosen a pure term life insurance policy with a sum assured of 10 lakhs. This cost about 5,300 rupees annually for a 15-year policy term with a 10-year premium payment term. So the remaining 54,700 rupees can then be invested for wealth creation. Your investment choice depends on your risk appetite. So if you are a low risk investor, you can opt for debt instruments like PPF, or if you are a high risk investor, you can opt for equity instruments like an equity mutual fund. Here, just for demonstration purpose, we have taken into account both the options, debt and equity. So in PPF, your investment at maturity would be 11.45 lakhs with an IRR of 6.20%, and equity mutual fund investment at maturity, especially pre-tax maturity value, would be 18.94 lakhs, and after capital gains tax, the post-tax value stands at 17.41 lakhs, giving an IRR of 10.27%. So this approach highlights why separating insurance and investment is more efficient. So traditional insurance plan usually mean low coverage and modest returns, while a mix of pure term insurance plus tailored investments like PPF or equity mutual fund provide superior protection and wealth growth, helping you achieve your goals with confidence. Then, what is the final verdict? Is investing in the Ageas Federal Guaranteed Income Plan worth it or not? So, this policy blends savings with life insurance, offering flexibility through two plan options tailored to cash flow needs. While it does promote disciplined saving, the plan falls short in two key areas, which is wealth creation and adequate life cover. So, the analysis of return shows that the savings component delivers below average performance and the sum assured is too low to safeguard a family's financial future. So, despite the promise of guaranteed benefits, the plan is not well suited for addressing both protection and investment objectives, and it also has a high agent commission. A smarter approach is to secure your family's future with a pure term life insurance policy, so you can invest separately in suitable instruments to build wealth and achieve goals. This strategy not only ensures financial security during uncertainties but also unlocks higher growth potential for your investments.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.